then click the link in the description. Now back to the video. So the whole basis behind entering off an order block is that there is a pile-up of orders from large entities that are moving price in the desired direction. So in this case, you are trading with the banks or the big boys. Whereas entering off a fair value gap to price, i.e. the market algorithm itself, needs to mark price efficiently because it was unable to do so previously. So you're actually trading along with the market algorithm itself. So as we can see, order blocks equal to trading with the big banks, and fair value gaps equal to trading with the market algorithm. As we know from our experiences that sometimes an order block works and other times it doesn't. The same goes for fair value gaps too. Sometimes they work and other times they don't. So this begs the question, who should we pick to trade with? The big banks that manipulate the markets or the market algorithm itself? Tough question, right? What if I said to you that actually this is really simple?
O sea que dice que los fair value gap es más del algoritmo y los order blocks es más cosa de los bancos. Interesante, no lo sabía yo esto. No sé si es verdad o no, pero es interesante. No lo había visto así.
What you have to do is decide whether to enter off an order block or a fair value gap and see who is in control of the move. Is it a large entity or is it the market algorithm? Let's look at 3 examples to see when to enter off an order block, when to enter off a fair value gap, and what to do when we are not sure. If we just look at this piece of price action on the 30th of November, I'm not going to use the replay tool because we don't really need to, but let's just have a look. So we have this price action, and as we can see on this time frame, which is a 5-minute time frame, we can see we are moving to the upside quite nicely. Now, as we're moving to the upside, obviously we're looking at structure, and structure is very important when looking for something called order flow. Order flow basically tells us where the banks want price to move to, because when banks get orders, they have to fulfill these orders, and then obviously they need to push price in a certain direction, so those orders are completed, and then once they are completed, then they don't really care about where price goes after that until they get their next order. And so essentially we are looking at this piece of price action and saying, okay, so are the banks going to, or are they manipulating price? So if we look over here, we can see price comes down, pushes up, pulls down, and pushes up. Now, at this point here, we actually react off an order block. And I'm just going to zoom in a little bit so we can see this a little bit better. We react off an order block. We know the trend is moving to the upside, and we get some, break to structure, trend continuation sort of thing over here. So we can see price is moving to the upside. Now, we have that price pulled back on this leg, reacted off of something here, and this is actually something on the lower time frame, not the 1 minute. So we know there's order flow starting. So we got this move up here, move down, push up higher again. And now, genuinely, when it comes to order flow, we're looking for price to react off an order block and for an order block to be left behind. Clearly, we can see from this move here to the upside, we get a very impulsive move. That's a very good sign that banks are in control of the market. And then we are looking for an order block, which we have very nicely over here. This can be refined onto like the 3 minute or something, but I'm not really going to go down to that time frame now. But what we can see is price comes down, and the move down has to be somewhat correctional, and as we can see, we get that right. Price firstly fails to make a higher high, which is a good sign that we're going to come down, and it's also a good sign that this low will get taken out as well. And then we come down very nicely, we tap in, and then we move away. So when it comes to taking a trade like this with these sort of confidences I've just gone over, we would be looking to enter at this point here with stops just below the order block and then targeting the highs. And as you can see, you'd get a very nice risk reward. I'm pretty sure you get a 1 to 5 as well, which we do. So essentially, in scenarios where we can see price creating order flow and reacting off of order blocks, that's where we want to enter off of order blocks only. And as you can see, if we did enter off an imbalance here, then we would only be doing ourselves an injustice because our risk reward isn't as good as it could have been. Now that we've gone over entering off an order block, when do we enter off an imbalance? So if we think back to ICT and when he...
Si deseas hacer los mejores cursos de trading, no olvides pasar por nuestro apartado de tienda. Aquí encontrarás nuestros 2 cursos avanzados, curso de trading con Fibonacci y el curso de trading institucional. En cada uno de los cursos encontrarás la explicación de lo que vas a aprender en las próximas clases. Donde aparece el temario del curso, podrás ver un PDF en donde se explica todos los temas y todas las clases que aprenderás. Además, actualmente tenemos campañas en donde el curso te puede salir de forma gratuita si te das de alta con nuestro broker afiliado. Si quieres más información o quieres adquirir este curso, únicamente tienes que añadirlo al carrito y realizar tu registro en la página web. En breve nos pondremos en contacto contigo para darte las instrucciones de cómo puedes empezar tus clases. No te lo pierdas.
Teaches to enter off an imbalance, he looks for one thing first, and that is liquidity to be taken. So if we look at this example here, we can clearly see we get liquidity from the downside being taken over here. So that's this point there to here. So we got the liquidity grab, and then as soon as we get the liquidity grab, we're looking for an entry point and some sort of breaker structure. We don't really get a breaker structure because let's say the structural point's over here and price moves down, then pushes up again, and then we can start to see we begin to come to the downside. And this is a good sign because now we can enter into this trade. We also know the trend is up as well, so we want to be alongside the trend. And if you looked at this on the daily time frame, your daily bias would also be to the upside. So very simply, we look to enter off an imbalance, right? Because this trade has confluences that are aligned with ICT's trading style. So what we can see is we have an imbalance over here and an imbalance over here. Now the only problem with entering off an imbalance is we don't know which one to enter off because we don't know where the true imbalance is, and I'll go over that in a separate video. So what we have to do is we have to incorporate both of these imbalances into the trade. So essentially we would be looking at something like this. So we'd be entering off of the imbalance like that, and our stops below the like swing high point or a candle essentially. So we could even have it at this point here because we expect price not to come in or push further than the imbalances. But because we know that this is an order block, we should cover that as well. So now that we've done that and we've covered the entries and the order block to the downside, we can have targets to the upside, and obviously from here we know that the buy side liquidity will be this here. So then your trade will be something like this. Obviously not the best risk reward, but because we know that the daily buys to the upside, we can leave runners, and there you go, you get a very nice risk to reward of about 3.58, and then the highest is 1 to 5. Perfect. So both trades that I've shown you, both the examples are 1 to 5, and that's a good thing. Now here's the thing, right? If you looked to enter off an order block only, you would get missed by this trade because price reacts off the imbalance, because this trade was a liquidity grab trade, and generally most liquidity grab trades tend to react off of imbalances more than they do when it comes to order blocks. That's something that I tested out and I found out from our back testing. But the main reason is because we know who's in control, right? It's not the banks, it's the market algorithm itself. And for our final example, we have this.
O sea, básicamente, me parece que lo que acaba de decir básicamente es cuando hace una toma de liquidez rompiendo un viejo bajo, por ejemplo, o un viejo alto, pues trabaja el fair value, y cuando está dentro de una estructura respetando que ya ha tomado liquidez y respetando, pues trabaja los order blocks. Bueno, un poquito ahí el refinamiento, ¿no? De lo que se viene a decir, que el fair value gap lo trabaja más el algoritmo y los order blocks son más trabajados por los bancos.
An order block or an imbalance. So looking at this piece of price action, we can see that price is clearly struggling to continue to the upside. So we know that sells are likely to happen. And what we can see is we start to get, these highs put in, and price starts to break down. So my eyes are really focusing on this piece of price action over here, right? So this piece of price action over there. So looking at this piece of price action, I'll zoom in a little bit. What we can see is, okay, we start to get breaks of structure, and then we're thinking, okay, so who's really in control here? Is it the banks or is it the market algorithm? So at this point here, we get this push down, which breaks structure and then pushes back up again, and then it reacts off of this order block. But we understand that we have liquidity below that price can target and liquidity above that price can target, and we don't really want to be caught in the middle of a range, right? So essentially we want to see which way does price.
Sí, pero aquí preguntan ¿por qué toma la vela verde y no la contraria? Vale, es por ejemplo aquí lo que hacen también últimamente, es que claro, hay tantos puntos, que es el fair value, el breaker, el order block, el decisional, el extremo, el tal, al final hay tantos puntos. Lo que suelen hacer cuando un order block es tan grande como tienes este de aquí, suelen coger dentro de todo este order block la última vela. La última vela es esta de aquí. A ver si te fijas, esta es la que... Esto es lo que se suele hacer, se está haciendo últimamente, pero seguramente si tú entras aquí en un time frame menor, está en 5 minutos, si te bajas a 1, seguro que ahí hay un order block, seguro, porque ahí hay 5 velas, si es una vela de 5 minutos, ahí hay 5 velas de 1 minuto, y seguro que ahí te vas a encontrar algún order block que te dé en esta zona. Es un poquito lo que están haciendo últimamente, ¿vale? No sé si te he podido responder. Aquí ocurre exactamente lo mismo, bajas, el último order block que había era este de aquí, pues en vez de coger todo este order block, te coge la última vela verde, que si la coges es la zona que te viene dando. Si vas buscando velas muy grandes, luego también aquí cogen las ineficiencias. Por ejemplo, este sería todo el order block, ¿no? Para coger la caída, pues aquí te coge el 50% de la ineficiencia, ¿no? Son temas más refinados.
And where can we enter from? So we wait for price to do its thing, it breaks structure again. Now we're thinking, order flow, and then price goes and grabs the liquidity. All of this liquidity here, including these lows here, this low here, and all of these lows are taken out with a nice impulsive move, and then price starts to come back. Then what we can see is we have an order block over here that we can enter from. I might as well just cover this high as well. And then we have
ahí te lo está cogiendo.
As we can see, the trade actually doesn't get triggered in because who was in charge, right? We thought it could have been the banks or...
Bienvenido al canal de Trading Forex TV Directos, en donde vemos estrategias y analizamos y reaccionamos a otros canales. Si todavía no estás suscrito, suscríbete y activa la campanita para que te lleguen todas las notificaciones. Muchas gracias.
It could have been the market algorithm. So the best thing to do in this case would have been to enter from the imbalance and covering the order block. So when you're not sure, cover both aspects. So in this case, your entry would be here, your stop will be, just above, and you can take the trade to at least below, which is a nice 1 to 3 trade. So this is what I do, and I've implemented into my trading to ensure that I don't get missed as often as I did, because sometimes order blocks get missed, and that is really annoying. And so, learning from ICT during his ICT mentorship, I have learned to incorporate imbalances when they make sense. Now, the only time I wouldn't incorporate an imbalance is if it's too big and it ruins the risk reward for me. Then there's no point in me taking that trade, in my opinion, because having a stop too large ruins your risk reward, and then in the long run, when you're obviously looking at your win rate and your risk reward, it won't make sense. And that's it for this video. I've had a
bueno, está bastante bien.
this in my trading, so I hope this helps out.
Yo no he visto muchos más. A ver este canal, bueno, un like. Tampoco ha sido un vídeo nada del otro mundo. A ver si Latino FX. Me suena que deben ser de la India, puede ser. Reino Unido. Ah, pues mira, me he equivocado. De Reino Unido. A ver, inicio. Welcome to my YouTube channel. Y un poquito de todo, ¿eh? ICTSMC, un poquito de vídeos de todo, ¿eh? Está bastante... Oye, habrá que echarle un vistazo. Un canal muy pequeñito, 12.600 suscriptores. Ah, mira, es este chico... A ver, tiene pinta de indio, ¿eh? Tiene pinta de indio. Me sonaba a mí voz de indio. Tiene pinta de indio. Pues sí, gente. Bueno, parece que tiene buen material. Realmente lo que hacen últimamente la mayoría de canales... Bueno, ya hemos visto la diferencia en este caso que ha sido explicado por Simulation FX. Ya hemos visto la diferencia que existe entre por qué coger un Fair Value Gap o un Order Block. Cuando toma liquidez y se genera un cambio de estructura, trabaja el Fair Value, y cuando mantiene estructura, trabaja el Order Block. El Order Block es trabajado por los bancos y los Fair Value más por el algoritmo, que Michael tira más por el trabajo del algoritmo. Esto tenemos que saberlo. Lo que está diciendo, hay muchos canales que lo que hacen es todo lo que enseña Michael, pues ellos lo vuelven a hacer, ¿no? De nuevo. Entonces, básicamente vamos a encontrar muchos canales de este tipo. Así que, gente, este ha sido el vídeo de la diferencia entre Fair Value Gap y Order Block. Tenía un vídeo más, pero yo creo que la tarde se está quedando ya muy intensa en cuanto a directo. Yo creo que 3 vídeos ya es suficiente por hoy. Voy a leer al Rey del Trading. Mañana se disparó la libra. Yo poco a poco voy aprendiendo más Master, jaja. Ahí le agarro el hilo. Sí, hombre, yo lo que siempre digo, estos directos va muy bien, porque mira, hoy nos hemos chupado 3 clases. Hemos visto de Michael 2, la del Open New Gap, no sé qué, Endoc, me he quedado con lo de Endoc, me ha gustado, por lo del perro, me acuerdo porque tiene un nombre fácil en inglés, el tema de los gaps. Hemos visto el tema de las Six Sisters o algo así, cómo trabajan las SMT, mete ahí por medio el tema de las SMT, y la diferencia de los Fair Value y los Order Blocks explicado por este hombre, que me imagino que lo habrá sacado de Michael, porque lo que hacen muchos canales de hoy en día de trading es coger lo que enseña Michael o canales grandes y lo rehacen y te hacen pues un poquito más espectacular, más marketing. Como veis, este vídeo pues tenía movimientos muy rápidos, la letra subtitulada, luego ya pasaba al gráfico, pues es un poquito el reciclaje de material que suele hacer muchos canales de trading. Así que yo creo que 3 vídeos para aprender esta tarde ha estado bastante bien. Lo dejamos aquí, espero que os haya gustado. Mañana jueves os espero a la misma hora, a las 8, aquí en directo. Ahora sí, chicos, besitos, feliz trading a todos. ¡Mua! Besote.